Hey, have you heard what's going on in the Orange County market? This is ridiculous. This is crazy. This is Dean Odell with Seven Gables Real Estate in the Odell Group. Today is April 21st. It is time for another Tustin Talks. We're going to look at the Orange County market data, followed up by the Tustin data. Let's get started with the charts right now. Okay, so let's look at starting by the active listing inventory year over year. There's currently 2,053 homes on the market. That's a decrease of 89 homes in the last couple of weeks. Today's inventory is the second lowest level recorded in mid-April since tracking started, with last year being the lowest. Last year at this time, there were only 1,732 homes on the market, which is 16% lower than where we are today. To compare to a more normal market, we like to take a look at the three-year average between 2017 and 2019, which was 5,780 homes, or 282% higher than where we are at current levels. Inventory is normally increasing this time of year. If you look at the blue line, you're actually going to see it's decreasing. The only other time that has happened in recent history is 2021. That is very, very unusual. So looking at demand in the last 30 days, we've had 1,663 homes go into escrow. That is up 103 pending sales in the last couple of weeks. This is the largest rise that we've seen in a 2-week period since February. Last year, there were 2,241 pending sales, which is 35% higher than where we are now. And prior to 2020, the three-year average was 2,777, which is 67% higher than where we are right now. Now, what some of you might remember if you watch this show on a regular basis is that I like to take the amount of inventory available and divide it by the amount of demand. So if we do that for this year, we take 2,053, we divide it by 1,663, and we get 1.23 homes per buyer. Now, compared to last year, we only had 1,732 homes, and we have to divide that by 2,241 buyers or demand, which only gave us like 0.77, like 3/4 of a home, which was crazy. Where our average this time of year is really 2 homes per buyer, roughly. So what you might notice here is that we are still not even close to what's normal. Okay, so what we have here is a special chart we want to show you for mid-April expected marketing time. And what you'll notice here is this chart starts in April 2013, and it has always been less than 60 days, meaning it's always been a strong seller's market all the way up until 2018. Then in 2019, it went to 76 days, which is a slight seller's market, right? And then in 2020, it jumped to 121 days. Then we got 2021, where all of a sudden things went crazy and we were down to 23 days. The same thing happened in 2022. These are record lows. And you'd see where we are now in 2023. We're taking 14 days longer to get a house sold, but by historical standards, and when you compare to previous years, that is still very quick and is still a strong seller's market. Now let's move to my favorite chart, which is the expected marketing time broken down by price range. If you're a buyer or seller in Orange County, this is the best way to see what's going on in your price range. You can also see the various market types reflected by the days in the market. So as you'll see, everything up to $2 million is still considered a hot seller's market. You'll also see that almost all of these price ranges are at most 10 days slower than last year's crazy market. The $2 to $4 million price range is a slight seller's market at 63 days, and anything above $4 million is a buyer's market. So the reason it's so important to look at your market by price point is because you will hear in Orange County that the average marketing time is 37 days. Well, as you can see, that's just not true for every price range. So you always want to pay attention to what's going on in your price range and in your local market. And speaking of local markets, this Tustin data chart, this is going to be our final chart. Every 4 weeks, we show you the statistics for Tustin micromarkets in 92705, 92780, and 92782 zip codes. We make this chart on our own, so you can only find it here on Tustin Talks. Today, let's compare the data from March 2023 to March 2022. There's actually more for sale in all the zip codes, but a lot more for sale in the 92705 zip code. Now, the new listings are actually down. So I know that's a little confusing because you say, well, how can new listings be down and there's more for sale? Because remember, this is just the month of March we're looking at. And the reason we're up is because there's more inventory hangover from previous months of listings. That's why you're seeing so much in the for sales compared to last year. Now, if you look at the solds or the closings, what closed in the last 30 days, you can see that those are down in every zip code, some more than others. Then if you go to pendings, now pendings is what's actually in escrow. What happened the last 30 days? What did people actually buy? Well, you can see those are also down across the zip codes. Take a look at the months of inventory across all these zip codes. They are all up year over year. If we look at average active price across the zip codes, you can see that those are also falling. And you'll notice that in the more expensive zip codes, that's where you're really seeing the red arrows. So that is kind of an interesting observation right there, right? The average sold price is also down in the highest priced zip code of 92705. And look at those average numbers as compared to 92705. Final list price to sales price, you can see we are at 99%, 100%, and 99% across 3 zip codes. Those are all down except for 92705, which interestingly enough is up 1%. Original list price to sales price, we have 97, 99, and 99. So that means that houses are selling within 3% of their asking price across all the zip codes. Average days on the market, you can see that is up compared to last year across all zip codes. Certainly more in the lower priced zip codes. So what do I deduce from all of this? I think it's very reflective of what we're seeing in the higher price ranges. The higher the price range, the slower the market is basically what it comes down to. In 92705, you can see that that has happened. I'm not saying it's a bad market, but it has certainly slowed more than 92780 and 92782. And I can certainly remember talking about this chart when it was completely on fire and it was the strongest zip code out of the 3. So if you want to pause this chart and take a closer look, that's great, but now we're going to move on to my buyer and seller advice. Okay, so I am going to start with some wise words from Stephen Thomas, who writes the Orange County Housing Report, and I think this is something that both buyers and sellers should be aware of. There's nothing spectacular about the number of buyers looking to purchase today. Today's insane pace is not a function of juiced demand. The issue is that there are only 2,053 homes available in the middle of April when there are typically around 5,800. The lack of for sale signs in every community is why today's housing market is insane. Housing insanity has returned to Orange County, and it will not change anytime soon. Okay, so now we know what Stephen has to say, and I agree with him. I don't think anything's going to happen soon. But I am still very curious what the fourth quarter of the year is going to look like, because we have this trickle-down effect of things happening in the economy, and a lot of the people I talk to in different trades and different lines of work are definitely sensing that something's going on, right? So the fact that there isn't any inventory is truly what's holding up this market, right? And then every time we get a little dip in interest rates, it juices the market a little bit more. But the reality is people are staying in their homes because of the interest rates. And I'm not sure how soon we're going to see that change unless we have a really bad economy. So buyers, I'd love to be able to tell you that things are going to get better and better for you, but it is really hard to see that right now. I mean, we've talked about that in previous episodes. So if you are buying for now, buy for the long term, okay? Buy for the long term. And then sellers, if you're ready to sell now, it's about as good as it's ever been. I mean, here we go. We're back to just this crazy market, only 37 days on average, depending on your price range, right? And we know how to get that house looking good, get it priced right, and get you the most money for it. So give us a call. We will net you more money. I guarantee it. So the last thing I want to say is thanks for tuning in. And guess what our YouTube analytics are showing us? They're showing us there's a bunch of people out there that continue to come back again and again to watch this show, but are not subscribing to it. So hit the subscribe button. There's no reason for you to have to keep finding this. It'll just come to you every 2 weeks in your inbox, and you will be completely informed on the Orange County market so you can make the best decisions for yourself and your family. In the meantime, give us a call. We'd love to help you out. See you in 2 weeks. Thanks and goodbye.